Is it time for the great rotation to reverse? Take a look. You're going to see that the QQQ ETF that tracks some of the biggest tech names up about 6.5% over the last month, outpacing the Dow. Joining us right now, JJ Kinahan, TD Ameritrade Chief Market Strategist. And JJ, I feel like we've been going back and forth for a number of months where we thought value was going to be the hot trade. Then we think it's technology, then value, maybe now technology's back on. What do you see? How would you describe it?
Well, I think the tug-of-war between the two, Becky, is probably going to continue, particularly through the next few weeks. And the reason I say that is because right now, like we have numbers today to trade on. Let's face it, the Fed meeting just ended. So because of that, the numbers take on a little bit less maybe importance than they do further along near the Fed meeting. Also, although there are some earnings today, we're not in earnings season. That doesn't start for a few more weeks. So we continue to go back and forth. The one thing I will point out, though, is to your point about, tech and value. I think sometimes things are miscast. And what I mean by that is stocks like Apple and Microsoft are stocks that people go to, these big technology stocks, during times of trouble. We saw that, mid-month last month when we had a bit of a sell-off. Last week when we had a bit of a sell-off. We see retail clients who go to Apple and Microsoft as pillars of strength or as things they feel will outperform to the downside, rather than necessarily looking to them for more of the growth side of things. So I think big tech is sometimes put in the growth side, but I don't necessarily, I see it as sometimes even being a safety play and then getting the added bonus of being looked at as a growth play.
Yeah, that's interesting. Probably an evolution in thought in some of those companies. Just in terms of the big tech names, though, and how tied they are to the Fed and to what happens to interest rates. If interest rates go up sooner rather than later, does it make them less attractive?
I think in the shorter term, it probably will for many people. But again, longer term, the big technology stocks, I believe people will continue to come back to, as I say, evidenced by what I've seen over the last few weeks. Where I think the bigger problem comes is maybe some of the other areas, And when I talk about big tech, I'm talking primarily the FANG stocks, along with, of course, as I mentioned, Microsoft. I do think some other areas of technology, if I look at chip stocks, et cetera, those will be the areas I think that suffer more so than do the bigger, and not all cases are those FANG stocks established, but again, I'm primarily talking Microsoft and Apple when I say this, the more established, been around, trusted names. When things go down, people trust them. Now, what we've seen in the last few days is, it started with Apple and Microsoft, but Amazon, Google, our clients going to those a little bit more. The one name they're not really going to, and Facebook, the one name they're really not going to quite as much, and they certainly don't go to in times of trouble, would be Netflix. That one just hasn't been bought as much out of the FANG stocks. And the other thing I would point out is that the buy the dip mentality has worked so well over the last few years that when there is an opportunity to buy the dip, these are stocks that people are also going to for the first, and I think you and I have talked about this before. You keep going with that same play that works in sports, and we're seeing the same thing in terms of investing.
It works until it doesn't. Hey, JJ, very quickly, just in terms of the retail investor and what you've seen, last Friday was options expiration. There was a big drop just based on comments that Bullard was saying that sounded more hawkish as a member of the FOMC. What did retail investors kind of say? What did you hear from them at that point? Because I was surprised at some of the vitriol that I was getting back on Twitter from people saying, why are you interviewing this Fed official? Why are you so focused on this? Just some anger about the idea that he would say anything that would drive the markets down, as if some of these investors are not used to markets ever going down, because you're talking about a 1.5% move. Not a big deal unless you have everything riding on options that are going to expire that day.
Well, primarily, Becky, most of our clients are actually out of those expiring options by that Friday afternoon. In fact, we would say to most people, you don't want to take that risk on. I think part of it came because that's the biggest move we've had on a quadruple witching expiration, I believe, and it was 10 years. So that might have been part of it also, I think, Becky. And also, we've had this slow volume, slow grind up. So it was the first time you saw heavy volume to the downside. I think it shook some people up overall. But the last thing I will add is that was, I believe, the second largest options expiration in the history of the OCC, which clears every exchange-traded option. So, you know, you just had a lot of factors at force there that I think may have led to a little bit of overreaction to the words that, you know, on your interview.
Yeah, it was a 1.5% move. If you can't get used to a 1.5% move down, you've got some rough times ahead of you. Anyway, JJ.
Well, the last half hour, I think, was so violent, that's what may have caught some people by surprise. Let's face it, that last 30 minutes, that was a really quick move.
JJ, good to see you this morning. We'll talk to you soon.
Shepard Smith here. Thanks for watching CNBC on YouTube.